End of financial year. Everyone wants to understand, as a business owner, how much tax am I going to pay this year? Or maybe am I going to get a refund? How to get my hands on that refund as quickly as possible. In this video, I want to share with you how to reduce your tax accountant's fee down for your business and also get what you want as quickly as possible. When dealing with your tax accountant for your business, this will probably come as no surprise. Be methodical in the way you approach them. Yes, shock horror, accountants and methodology, who would have thought? But there is a particular process we like to instruct our clients to do to ensure that you minimize your accounting fees, but also get your tax return and financials done in the most efficient manner possible so that you're not left with a last minute tax bill. You actually have 6-8 months to prepare for when a tax bill is due or when a refund is available. You can get your hands on it quicker. The first question you need to ask your tax accountant is, what can we do better? From the information we've provided them in the past, how can we provide things in a better way that would reduce the fee down, i.e. give them less work to do? Do we need to respond to queries quicker? Do we need to give them more in-depth information? Ask them, what do I need to do to get that fee to come down? What this does is it sets very clearly the expectations around what you want to achieve out of the financial process this year of getting your finances done and your tax return. Of going, hey, our fee shouldn't just increase year on year on year, but you still get the same financials and tax return at the end of it. Now, yes, wages go up, inflation goes up, cost of doing business goes up. But at the same time, you don't just want to be increasing your fee 5-10% every single year because they feel like it. What can we do to reduce that down? So number one, set the expectations of what we can do differently. The next element is set the expectations early. What we mean by this is end of financial years at 30th of June, touch base with your tax accountant early in July and go, if we get our information to you by this date, in the format that we're going to share with you in a moment, and also we respond to your queries within 24 and 48 hours, can you commit to completing our tax return and financials by a certain date? Let me give you an example of one that we've done in the past. We will communicate to the tax accountant, hey Bob, hey Jill, if we get the information to you for this business by the 30th of July, and we ensure that we respond to all queries within 24 to 48 hours, can we expect to have our financials and tax returns completed by the 31st of August? Thank you very much. We've never had somebody push back and go, no, we can't do that. Because you're getting in early, you'll find it surprising, but tax accountants that do business work, this is actually their quieter time of year when the end of financial year is just finishing. So you get the work in sooner. They can plan for it. They can put your work into their workflow and know that they're going to have your work ready to go. So they'll put the resources there dedicated to it. And also you're getting their commitment to have it completed by that date. We've been late by a week or two for reasons that we understand internally, and we go, hey, it's now going to be the 15th of August. Can you ensure that we have it completed by, say, the 15th of September or the 30th of September? Again, if your tax bill is due on the 31st of March or the 15th of May, you've bought yourself around about 8 to 9 months of time of knowing what your bill is going to be versus when you actually need to pay it. And also, if you're due a refund, you can get that refund now in September rather than down the road in March or May. The next part is get a quote. A lot of accountants do this now, but get them to provide a quote or an estimate of what the cost is going to be. But you've already established, number one, you're going to improve the way things are going to be delivered and how you're going to deliver that information, and also the timeliness of that information. Get a quote from them so you can hold them accountable around what your fee expectations are for the year, knowing that you're going to do these improvements in your methodology around the information you provide your tax accountant. Many, many moons ago, I started my career working in a tax practice, and it was actually as a 21 or so year old, it's actually a great place to start because you get some basic understanding of tax and also business at the same time. I also learned that I didn't want to do that forever, but I knew that going in. The moral of the story though, is that the methodology that they use is very helpful to understand to reduce your accounting fees down and the information you need to provide them. A lot of accounting firms now provide checklists around things that they expect you to deliver to help with the process around completing end of financial year, the tax returns and the financials. But because we've asked the specific question around what we can do better, there might be more intricacy that we can provide for very little cost for us, but will reduce their cost of doing their job downwards. The most time-consuming part for the tax accountant is reviewing the business's balance sheet and profit and loss. Just about every business owner would have other entities and individuals associated with the business, but the most time-consuming part is the actual review of the business itself. Their goal for the business is simple. Prove every balance on your balance sheet and make sure that nothing on the profit and loss is misallocated and should be included on the balance sheet. So for example, an item that should be capitalized on the balance sheet isn't showing on the profit and loss. Our job is to tick as many of those boxes as possible so that when they get your balance sheet and your profit and loss, they are literally looking at your work paper that you've provided them, the balance sheet, and going tick, tick, tick. If you've done that in such a way, you should be able to get that accounting fee to come down. Before we go into the nitty-gritty of what we need to do for the balance sheet and the profit and loss, there's 3 things you need to bear in mind. Number 1, have as accurate descriptions on all your transactions as possible. If you have JB Hi-Fi or Best Buy or whatever the business name is, in the description that's it. It could be anything. It could be a computer screen, it could be a laptop, it could be a television, hundreds of thousands of options it could potentially be. But if you put 4 computer monitors, 12 inches, etc., that level of detail, the accountant's questions are going to be answered by that level of detail you put in your transactions, number 1. Number 2 will depend on the system that you're using. If you're using a cloud-based system that they can log into and see all the transactions for themselves, you might not need to provide all the general ledger detail because they can go in there and see it for themselves. Whereas if you're using a different type of system, it might be more industry specific rather than a general accounting system, they're unlikely to get access to that system. You're going to have to provide them more PDFs and more information at a transactional level than you would if you were using a more traditional accounting system like Xero, MYOB, Reckon, QuickBooks, those kind of systems. And the third element is provide an explanatory document. The reason for this is some things might need a little bit more detail provided on them than just the bank statement or just a reference point that you're going to be pointing to in a moment. There might be a variance that you need to explain. For example, we've seen businesses where they've made a mistake on their bank reconciliation on the last reconciliation of the financial year. So if we go, the reconciliation says $100, the statement actually says $98, but we've rectified it at the start of July next year, that can answer their question. The accountant will sign off on that. You've already preempted a question they may have around why is this different to what we thought it was going to be. Now moving into the nitty-gritty. As we said before, your tax accountant needs to prove every balance on the balance sheet. Working through the assets, you're going to have to provide the following. Your bank accounts reconciling. This includes providing your bank statements. Your debtors or accounts receivable reconciling. Any prepayment schedules you may have. Verification of your stock on hand and work in progress if you have any work in progress. And invoices for assets purchased during the year. Under our liabilities, we'll have to provide our credit card statements and ensure they reconcile, our trade creditors or accounts payable ledgers and reconciling those, any bank loans, making sure they reconcile and provide bank statements, any new equipment finance, leases, hire purchase, loan documents or contracts. Also making sure any equipment finance, lease contracts or hire purchase contracts are reconciled at the end of financial year. Making sure our GST, VAT or sales tax reports matches back to our lodgements for the year. Our pay-as-you-go or pay-as-you-go withholding or pay-as-you-earn liability reconciles at the end of the financial year. Our superannuation or pension liability reconciles at the end of the financial year. And leave entitlements reconcile back to the pay records at end of financial year. Within the equity section, make sure all personal drawings and tax payments are clearly narrated, and any inter-entity loan account balances reconcile between the two. On the profit and loss, make sure your wages and superannuation or pension accounts balance back to your payroll reports. They're going to review any travel expenses. We don't want the Disney trip going through on the taxman's account. Repairs and maintenance, they are going to want to see that there's no capital items within there. Same thing with computer expenses. And staff amenities, making sure there's nothing in there that isn't tax deductible. There will be other items they will request that are specific depending on what your accountant asks. We know some tax accountants for clients who ask for everything, including blood type. And then we've got other accountants who will ask for what we think is a reasonable level of questions. Again, it depends on what they're going to ask from you, on what you need to provide them. And as we mentioned earlier, if you're running a finance system that they won't be able to access, you'll probably need to provide them greater levels of detail regarding general ledger transactions, which you can easily PDF out of your system and email to them. So there are the steps to get the most out of your tax accountant relationship for the lowest possible price. Firstly, ask them how we can improve. What can we do differently? What can we do better to reduce our fee down? Secondly, set expectations. If we want to have everything finalised by a certain date, if we can commit to having everything done at our end and to you by a certain date, does that mean we'll have it completed? Thirdly, get a quote. Hold them accountable, no pun intended, for the investment you're going to make in their services for the financial year. And then provide them the best, most highly accurate information you can so that they can verify the balance sheet and the profit and loss in the most efficient manner possible.